and it's the 12th of January 2023. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live on Channels Television. I'm Ladi Williams. It's great to have you join us. Let's take a look at what's in the news now. See, the World Economic Forum has raised concerns about Nigeria's economy as this year is set to be marked by increased risk. The organization, in its 2023 Global Risk Report, lists terror attacks, debt, cost of living, rapid inflation, among others, as top risks facing the country's economy. It, however, highlights cost of living as the most severe threat. The forum advised companies to focus on developing strategies that will position them well for longer-term risk and structural change. And the Gombe State Office of the Central Bank of Nigeria has taken its sensitization on the newly redesigned Naira notes to Gombe main market, urging traders to deposit old notes before January 31st. The Gombe State Controller for the Apex Bank, Mr. Sheo Goringo, says the essence of the awareness campaign is to engage and sensitize stakeholders on the new policy of the bank. Take a listen.
Members of the Gombe State Office of the Central Bank of Nigeria are in the Gombe main market as part of efforts to enforce the utilization of the new Naira notes.
From Tuesday, 10th January,
the officials want the traders to understand the idea behind the introduction of the new Naira notes.
For Nigeria, it's long overdue. Some of our currencies have stayed for 20, 14 years or so. So this is the right time to redesign our currency. So there are a lot of benefits for redesigning our currency. Number one is it will improve our monetary policy transmission mechanism. We use money supply to transmit our monetary policy, and CIC is a component of monetary policy. So definitely our monetary policy transmission mechanism will be very effective.
For the traders, this sensitization is key for most Nigerians at the grassroots.
We must have to find an avenue to see that we sensitize our members in such a way that they will understand this policy, and the policy made by government is solely for us to have an ease process in our own transaction.
The Apex Bank also used the opportunity to educate traders and residents on how to identify the original notes using the unique features of the new Naira notes. They also played down the allegations of shortages of the new Naira notes.
And it's definitely all about the new Naira right now, getting the people adopting the new notes. But another issue still on the radar is debt, and that's obviously an issue globally. According to the Debt Management Office, public debt rose to 44.06 trillion in the third quarter of 2022, and the total debt stock rose from 42.84 trillion recorded in the second quarter to 44.06 trillion in the third quarter 2022. Let's get an outlook of Nigeria's debt profile in 2023. Join us now is Kelvin. Emmanuel, CEO Derry Hills, join us from Abuja. Great to have you. Happy New Year.
Good morning, Ladi.
Good morning.
Happy New Year to you.
Yeah, it's all about debt at this point. It reminds me of that book where they talked about the kiss of debt. Looks like it's becoming a global issue right now, obviously with tightening rates at this time. But the WEF does not see debt as the main issue for Nigeria in 2023. Talking about the risk, I did read that report earlier. How are you seeing it?
Ladi, please, can you just backtrack on the question? I didn't get.
Okay, so yeah, I did read the report, by the WEF. They said the major risk for Nigeria is the cost of living crisis, but debt is also a risk, but it's not the major risk. So how are you seeing the whole debt issue with Nigeria?
Well, cost of living, the debt has there's implication. You can draw correlations between cost of living, cost price index, inflation, and the debt situation in Nigeria. If you look at the fact that the government has accumulated about 24 trillion naira in ways and means lending, which started in 2007, by the way, and you consider the fact that that has had an impact on currency devaluation in Nigeria and the acceleration of inflation in 2022, for 10 consecutive months, the central bank noticed that the inflation kept rising consecutively for 10 months. And in several meetings, it raised the MPR by 500 basis points. So there's a strong correlation between inflation, cost of living, the fact that the purchasing power parity of Nigerians has reduced by about 47% over the last 8 years since President Buhari took office, and that's the per capita income, the Human Development Index, and the debt situation in Nigeria. And speaking about the debt profile Nigeria has, it's quite unfortunate because if you consider the numbers, if you go back in time to 1999, Ladi, you notice that Nigeria had a debt profile of $28 billion in external loans in 1999 when President Obasanjo took office. He had an internal debt of about 95 billion naira. Yes? And when President Obasanjo went on with the Paris Club and renegotiated Nigeria's debt, it came down to somewhere around $2.1 billion. And when he was leaving office in 2007, the internal debt was 2.1 trillion. The external debt was $2.1 billion. So, and you notice very well that after they succeeded in renegotiating the Paris, the Nigerian debt with the Paris Club and then reduced it by about $26 billion. In 2006, Fitch started rating Nigeria's sovereign bond rating. The first government sovereign bond rating for Nigeria was published in the first quarter of 2006. And that led to an influx of both hot money, speculative foreign portfolio investments, and non-speculative foreign direct investments. That number rose from somewhere around $4.4 billion to a peak of about $11 billion over the space of about 4 years. And it's quite sad that between 2007 and 2023 today, Nigeria's external debt has risen to $39 billion, which is $11.5 billion more than what Obasanjo met it at in 1999. While the internal debt, the domestic debt, has risen to about 25 trillion. Now, when you add the proposed securitization of ways and means and the 2023 Appropriation Act that says the government is going to raise 8.8 trillion in non-recurrent debt expenditure, you see that number going to somewhere around 54.8 trillion, which brings the total outlook to 77 trillion. So basically, we had 2.4 trillion in 2007. Today, we're talking of 77 trillion. And by the way, Ladi, every Nigerian, even the ones that were born this morning, every Nigerian today owe debt per capita, 368,000 naira plus to creditors, both local and international.
All right, but Kelvin, tell me about, because, some analysts have said it's not about the size of the debt, that it's the pace, the pace of growth, of the debt. How are we doing, looking at the pace so far?
The pace is frightening. If some people are saying that it's not about the size, it's the pace is very frightening, because you can imagine President Obasanjo looking at what he left in 2007 at 2.4 trillion, that has risen to 77 trillion naira today. And you can imagine that 29% of your budget is going into servicing debt for 2023. So basically, somewhere around 48% of Nigeria's budget for 2023 is going to go into two line items, debt servicing and PMS subsidy. And that PMS subsidy of about 30.6 trillion is only for 6 months. If the next president decides to remove PMS, under recovery on PMS, direct sales, direct purchase, within the first 2 months or 3 months of him being the president, then he doesn't need to provide another 30 trillion naira for PMS subsidy. But two line items alone takes 48%. And those two line items, has nothing to do with growing the economy. It's just to service debt and to make sure that PMS in Nigeria is cheap which in my opinion, the daily consumption volumes are seriously inflated. So I disagree that the pace is not as frantic and fast and does not call for concern. It calls for grave concern. Because at the level we are today, your debt to GDP ratio is going to rise to 35% of GDP. Debt is going to rise to 35% of GDP by the third quarter of 2023. And that calls for serious concern. Because when you look at and this is why I like referring, let the government, let the officials in government, let them refer back to the law. What does the law say? Because I've heard people say, oh, they are going to decouple debt from revenue and expenditure. What does the law say? Are you breaking the law in going around and borrowing on a borrowing spree? Yes, the government is breaking the law. Because if you look at the Fiscal Responsibility Act of 2007, sections 41, subsections 1A, it says that the Nigerian government can only borrow money to fund capital expenditure and human development. But what are we doing today? We're borrowing money to pay PMS subsidy, and we're borrowing money to pay interest on existing debt, consolidated debt. So it is a cause of concern, and it's very worrying and disturbing.
Right, and obviously, Kelvin, Sub-Saharan Africa seems to be going through, some kind of debt servicing, shock at this time. I've seen a report, forecasting for 2026 that, the whole of Sub-Saharan Africa is having a debt, issue at this time. But how are we doing compared to our African peers?
The reason why, Ladi, I don't believe we're doing well is because our tax to revenue ratio is 6.3 to 6.4%. Our non-tax, both tax and non-tax revenue to GDP ratio is somewhere between 7.2 and 7.4%. That is very low. Even Ghana, that is in a debt crisis and that had a default on its debt, has a revenue to GDP ratio of 14%. South Africa has a revenue to GDP ratio of 22%. Egypt has a revenue to GDP ratio of 18%. Last year, South Africa raised about $122 billion in revenue. How much did Nigeria raise? Egypt raised about $82 billion in revenue. How much did Nigeria raise? So these are the questions we should ask. If we're saying that, oh, we're not doing badly compared to our sub-Saharan African peers, the question we should ask ourselves is, what is our revenue to GDP ratio? And the solution is not by raising tax arbitrarily. Like, for example, the amendment to the Finance Act that was proposed that has generated a lot of protest on a single 50% tax credit on qualifying expenditure and on raising punitive damage for upstream oil and gas companies. And Ladi, what's very interesting about that, from 30 to 50%, what's very interesting is that if you look at the Petroleum Industry Act, for example, there is what they call the Associated Gas Reinjection Act in the Petroleum Industry Act, AGRA, that says that the Minister of Petroleum has the discretionary powers to give permits to oil companies, upstream companies, to flare gas in the case that they're unable to find reinjection and utilization uses for the gas. What it simply means is that if they're unable to find midstream gas gathering infrastructure to be able to trap and process the gas for off-takers, they're allowed to flare gas. So you placing so much burden on companies, both in petroleum and non-petroleum, in a bid to raise the revenue to GDP ratio is not the solution to the problem we have in Nigeria today. It requires proper thinking. It requires paying attention to the laws, because if you really look at the foundation of the problem, Ladi, you realize that there is a huge disconnect between monetary and fiscal policy making in Nigeria.
All right, Kelvin, let's talk about, because obviously it's a funding issue. Everyone's trying to raise revenue, somehow. We see the LCCI recommending that the government should look more at equity, financing. What do you think about that?
Are they talking about like securitizing
Go to
assets?
the capital market and raise funds.
Well, if you go to the capital markets and raise funds, you're talking about the debt capital markets. And if you're talking about the debt capital markets, we're still going back to government bonds. The yields are at somewhere around 18%. Look,
I think it's more like selling equities, you know, at this point, kind of like, you know, making it some kind of package for investors to, you know, invest in.
Look, Ladi, in the capital markets are divided into two. You have the debt and equity capital markets. Yes? The markets where the government goes to raise money is the debt capital markets. Okay? And that's where you have your government bonds and your savings bonds. Okay? So, you know, for example, the planned securitization of ways and means lending, where the government intends to convert that bad loan into a 40-year government bond, is going to the capital markets. The question is, the yields right now, as we speak, are they sustainable? In my opinion, the answer is no, they are not sustainable. The government borrowing at 18% is a real cause for concern and is a signal that there's trouble in Nigeria with the management of the economy. So I don't think going to the capital markets is a solution to the problem.
All right. What other solutions do you see, Kelvin? We did get, you know, some experts actually recommending debt restructuring. Is that what we should be looking at?
Look, I'll put it like this. I'll give you like a short scenario. So you explain, you understand the connection, the nexus between monetary and fiscal policy, and how when we're looking at this issue of raising funding and rebalancing and restructuring the Nigerian economy post this election that is coming up in February, we have to look at it from a holistic point of view. I'll give you a scenario. So if you look at the Naira Yuan swap, for example, that was consummated in April of 2018 and that failed, you consider the fact that today as we speak, China controls 26% of all international trades that Nigeria does. America controls 11%. And the government, in its good intention, wanted a situation, for example, where traders could get from M directly with the Chinese yuan without using a third-party currency and without relying so much on the US dollar and the pressure of getting the US dollar. And so far, between 2018 and 2023, only about $600 million of transaction has been done. And what's the reason? The reason is because Nigeria, the Central Bank of Nigeria does not have enough foreign reserves as banknotes with the People's Bank of China, the PBOC, to be able to provide liquidity for settlement. And I'll tell you what, Ladi, we'll go back to the CBN Act, sections 24, subsections B, that says that the central bank is only obligated to place foreign reserves in countries where they have freely convertible currencies. The Chinese yuan is not a freely convertible currency. That's why only 2.7% of Nigeria's foreign reserves is with China, while the remaining about 96.30% is with the US Federal Reserve. Now, let me tell you how all this ties into how we should begin to look at this problem. We have an exchange rate problem, and we have a problem of lack of supply of dollars that is caused by several factors that we've discussed over time. But in looking at the problems Nigeria has, the federal government needs to realize that if it doesn't rebalance its policy to adopt a floating exchange rate mechanism where you have one single exchange rate instead of 6, and you have investments coming to Nigeria, and you have a situation where there is no spread between the official and the parallel market, and the pressure on the Naira devaluating is not causing inflation to go up, and that interest inflation yield to continue to be adjusted, because anytime inflation goes up, the Monetary Policy Committee has to raise the interest rate in what they call the inflation to interest yield curve. And as they raise that interest rate, you see that the government has to pay more money to borrow. It pays more money to borrow, it ties it back to your debt servicing. So you notice that as bond yield spread has risen from single digit of somewhere around 5%, 6%, 7% to 10%, 13.8%, and now somewhere around 17.8 to 18%. The budget that the government has presented to Nigerians has consistently shown an increase in the debt servicing costs. That's how it ties. So that's why I say, look, in looking at these problems and looking at the revenue shortfall, it's important to look at it from both a monetary standpoint and a fiscal standpoint. It's important to look at holistic solutions. And I believe very strongly, especially for sections 24 and sections 38 of the CBN Act, it's high time the Nigerian Senate amends the CBN Act and makes structural changes that will aid more efficient monetary policy direction that will support the fiscal side of the equation.
Right, and it looks like 2023 is definitely shaping up to be a year that debt is going to be a major conversation, going forward, even with, most of sub-Saharan Africa at this point. But Kelvin, we're hoping for the best. We're hoping we solve this debt issue, at some point in Nigeria. Thank you so much. That was Kelvin Emmanuel, CEO at Derry Hills. It was great having your perspective. Thank you.
Ladi, thank you for having me.
All right, so that was Kelvin Emmanuel that we're talking about debt and debt servicing right here in Nigeria. Well, our next conversation now will be moving on to the commodities market update. That's after the break. Do stay with us. And for commodities market update now, we see the oil prices seem to be rising this morning. We see Brent rose by 50 cents to $83.17 per barrel, while U.S. West Texas Intermediate crude, that also rose 50 cents a pair there, and that's up about 0.7%. That's trading at $77.91 per barrel this morning. Let's talk to Dr. Desola Simoni now, analyst, financial derivatives company. Great to have you. Good morning.
Good morning, Ladi. Thank you for having me on the show.
Yeah, so obviously we all want to see oil prices, continue that downward trend. But now we're seeing Goldman Sachs predicting $100 per barrel this year. How are you seeing it?
Thank you for that question, Ladi. At the moment, like you said, oil prices have been quite volatile this week. But at the moment, the key factor driving oil prices are larger than expected build-up in U.S. crude stockpiles. We expected that crude stockpiles were going to contract by around 2.2 million barrels a day last week. However, it expanded by around 14.9 million barrels, according to data from American Petroleum Institute. So usually the crude stockpiles is an indicator of demand-supply mismatch in the U.S. When we see huge build-up in crude stockpiles like this, it's an indicator of softer demand amid a huge supply. But supporting prices have been renewed optimism about global growth, particularly coming from because of China's reopening. However, it's not yet pushing prices as high as it could, probably because of one, China is still having a health crisis of mass spread of COVID-19 virus, with many hospitals being overwhelmed by cases of COVID-19. However, we are seeing some pickup in economic activity China, and we expect that if that picks up quite significantly, it's going to push oil prices upward. And this is particularly important because China, like I said, is the largest importer of oil globally, and it's also the largest importer and second largest user of oil globally. We're also seeing a softer US dollar, which is making the dollar-denominated commodity cheaper to holders of other currencies. So, and that's part of what is supporting prices. So I think also it's a little bit too early to say whether oil prices will reach $100 per barrel this year. I think that's a bit optimistic, and hopefully we hope oil prices reaches that level for oil exporters like Nigeria. But I think the key factor is one softening of I think pausing the hike in monetary policy would support that, as well as more economic activity, opening up of the Chinese economy. I think those are two key factors that would likely push oil prices upward going forward. Yeah,
obviously China a big mover in that market, but it looks like, obviously we saw a lot of companies take advantage of these oil prices. Companies like Aramco and BP Shell, they all, did well in 2022. But it looks like Angola did take advantage. The economy grew by about 3.1%.
Yeah, indeed, Angola really expected the relatively high oil price environments by three main dimensions or four main dimensions. One, the Angola's oil production stabilized last year at around 1.2 million barrels a day. If you look at data from OPEC, Angola's oil production for Q1 averaged about 1.2 million barrels, Q2 1.2 million barrels. Q3 was also around 1.2 million barrels. So they were able to produce more. In addition to that, Angola significantly increased their exports of oil and overtook Nigeria as the largest oil producer in Africa as at May 2022. In addition to that, the Angolan currency, the Angolan kwanza, strengthened about 10% against the US dollar last year to close the year at around 505 kwanza to the US dollar. And all of this simply softened the impact of the higher price environment, or it softened the impact of imported inflation on the domestic economy. We also saw the debt to GDP ratio also a decline in Angola. So all of these factors made Angola really take advantage of the oil price, higher oil price environment. If you compare that to, and also Angola's inflation trended downwards, it was like a demand curve from the, I think it closed the year December at around 13 or 12%. Compare that to Nigeria, we saw almost the opposite. We saw for Nigeria's oil production almost declined steadily across the quarters. For Q1, it was around 1.3 million barrels a day. For Q2, it had declined to 1.2. By Q3 and Q4, we are talking about 1 million barrels per day. Some months, it was even less than 1 million barrels per day. Obviously, there are many factors responsible for this. One was vandalization of oil infrastructure. We also saw oil theft, little or lack of investments in oil sector. All of these factors contributed to lower oil exports. And also because of the currency issues and also subsidy Nigerian importing PMS, all of these factors meant that Nigeria could not really take advantage of the relatively high oil price environment.
And talking about oil prices trending up at this time, we're also seeing LNG price. That's also inching up. So it looks like most of these commodities are starting to resurrect at this time. Is that a sign of things to come?
Not really. I mean, oil LNG prices going up in Europe is mainly because of our forecast of more cold next week. But before that, we've seen oil LNG prices in Europe actually trend downwards for two main reasons. One, we saw a bigger than expected or bigger than normal build-up in LNG stockpiles across Europe. For this time of the year, LNG stockpiles are significantly above the 5-year average. And that was mainly due to lower demand because of warmer than expected winter. Like for the past 3 weeks, we've been enjoying a warm winter in Europe. As I speak to you, Ladi, the weather is around 11 degrees. You could go out I could go out like this and I would not freeze over. Wow. But there are now forecasts of really cold weather coming on next week. I mean, in the UK, the weather is temperature is expected to decline to as low as -5 degrees Celsius. So because of that, there's more demand for LNG, and that is why we are seeing LNG prices in Europe trend upwards at this time.
And obviously, we're all looking forward to CPI data, coming from the U.S. All eyes on that data. And obviously, risk asset investors are looking out for that. We're seeing, a big rally in U.S. equities, and also the crypto market there also rallying. But is it going to play out the same way we saw it last year? The data comes out, then all these markets go plunging again.
Usually the US CPI is one of the most watched economic data in the world because it dictates the pace of monetary policy in the US. So at the moment, the expectations that US inflation will slow to around 6.5%, coming from 7.1% in November. And if this expectation materializes, I think it is positive because at the moment there's a little bit of confusion about the direction of monetary policy in the US. On the one hand, so market watchers expect that that monetary policy rate will peak at around 4.9% in 2023, with smaller increases around 0.5 increases and around 0.25 increases towards the end of the year, and it will hold still at that level. But there are other officials of the US Fed coming out to say that they see inflation, they see interest rate top 5% to around 5.25%. So there's a little bit of confusion here and there about the direction of monetary policy. But I think if this inflation expectation of around 6.5% materializes, first of all, it will mean that inflation has decelerated for 6 consecutive months, which is positive. It will also strengthen like the doves in the U.S. Fed it may also give the U.S. Fed more incentive to maybe hike prices at a hike interest rates at a slower pace, or even hold interest rates in the meantime. So I think that's positive, and that also has effects on global stock markets. Obviously, if inflation comes in at 6.5%, it may bring we may return to the bull market. We may see some risk on sentiment in the global markets. We may see the stock market also rally. It will also be positive for commodities market, because we see a softer dollar, and which will boost demand for dollar-denominated commodities.
And if the CPI comes out hotter than expected, I guess we know what to expect with the market.
Indeed.
All right, thank you so much, Dr. Desola Simoni, analyst, financial derivatives company. It was great having you. I'll be looking out for that CPI data later out today.
Yeah, thanks for having me.
Thank you. All right, now let's move on to other markets. Now we have Anita Edet to bring us the details there. We did have quite a positive outlook.
Yes, good morning, Ladi.
And the market is not looking so bad,
exactly.
Starting January 2023.
Exactly. Second week of January.
Yeah, it's not looking bad at all.
Yeah. And I think it's more of a resilient market, and we need to also highlight that we're in an election year. Election is just about less than 44 days to the general election, and then of course what we had expected was that the market would make a retreat, but instead it's making more of a rebound. You might see some mild profit taking, but at the same time you would see the market make some comeback. And interesting to note that it's more of the local investors than the foreign investors that are driving the market sentiment.
I wonder if that continues in 2023, but
exactly.
We'll see.
Well, we would have our analysts to talk about that in the course of the week, maybe by Friday. But first, let's take our attention first to the fixed income market. First, we're starting with trading at the FMDQ exchange, which the bonds market, it ended Wednesday midweek trading session bullish, and that's because the average yield there had contracted by 4 basis points to about 12.5%. Take a look at the board there. The 23rd of February 2028 paper, it took the center in terms of deals, and of course in terms of the value for that market, 2.2 billion naira, and other markets, as you can see on the board. But cumulative total number of deals carried out on that spot was about worth 15.48 billion naira. Over to the Treasury bills market. The Treasury bills market, it was quiet, and that's because yesterday we had the primary market auction by the central bank, which the market participants there had anticipated the results of the Wednesday primary market auction. And of course, on that market, the average yield there was flat at 2.9%. Take a look at the board there. 14th of September 2023, later this year, the total number of deals carried out there was just 1.5 billion naira in value. And then total number of deals there, 15. Now, moving over to the almost segment of the market, it was unchanged in terms of the average yield, while it was unchanged at 3.4%. Take a look at the board there. So, but let's drill more on the primary market auction, which was carried out yesterday. So to give us more insight into that, let's talk to Princess Iriwoba, fixed income dealer at FSDH Merchant Bank. Thank you for joining us, Princess.
Thank you for having me. Good morning.
Yeah. So we had the first primary market auction carried out yesterday, and of course participants had already awaited. That was expected to have an impact on the yields there. So can you give us more details about that?
Yeah. So we had the primary market auction yesterday, and at the long end of the curve, the 1 year paper, we saw subscription really high at around 310 billion versus what was maturing, which was about 53.8 billion. We saw rates depressed across the curve for the 91-day paper and 182 and 364-day paper. We saw yields drop by about 75 basis points, 282 basis points and 119 basis points, yields compressed, largely giving the system liquidity. We saw that demand pull through at the auction. However, just about 52 billion was allotted by the DMO. We expect that in today's session, that unmet demand will filter in, and we expect that yields should compress further.
Okay, Princess, now, one final question before I let you go. A couple of days from now, the National Bureau of Statistics is expected to release the December inflation report, and some economists have projected that we would have the first decline in 9 months. They're projecting at about 20.28%. So now, what is the expectation for the fixed income environment when you take this into cognizance once we have that report out by next week?
Okay, for giving festive spending in December, I expect that not a decline, but some form of inch up, and that's because of the festive spending. I expect to see that filter into the market. But for fixed income market for the month, for Q1, what would be a bigger driver would be the potential budget deficit that has to be covered. And given that that's mirroring the fact that that is the government's plan for this year and the increase in the budget deficit, I expect that there will be some form of yield inch up compared to where we are trading currently at the secondary market. So I expect to see that in Q1, some form of increase in yield across the bond space or fixed income space generally.
Okay, thank you for that analysis, Princess. And of course, our markets, our eyes will be on that market to see how it turns out. So,
thank you.
Now we move over. We were talking about the OMO markets, and then last for the fixed income segment, we have the CBN special bills, which it was a little bit higher in terms of the concentration. 27th of February 2023 paper had the highest number of concentration there, 6, and then cumulative total number of deals there was 8 at 31.11 billion naira. Let's move over to the equities market, which staged a rebound more than 0.5%, which is in basis points, that's more than 280 basis points. And then, of course, year to date, we're up at 0.93%. We've gained more than 130 billion naira. Now, take a look at that board, 28.17 trillion naira. That's the value that the market has risen to so far. And that came on the back of major banks, the big banks, what we call the FUGAs, the First Bank, Union Bank, GT Bank, Access, and Zenith Bank, as well as Boa Cement, which was responsible for that 0.15% increase that you see on the consumer, the 1.50% increase that you see on the industrial goods counter. But take a look at the banking sector, 1.05%, while the only decliner was the insurance sector, 0.67%. Oil and gas, a second day now, it's unchanged. Now let's take a look at the activity chart. In terms of activity, it was just red across the board. Total volume of deals carried out was 18.39%. Value was down 1.59%, and then deals was down by 12.07%. So for that market. So Ladi, that's it for the market. It's still bullish, if you ask me. I don't mind what you see, the red board on the activity chart.
That's low buying pressure we saw there.
Exactly.
Not that intense as we saw before. All right, thank you so much, Anita. We're looking out for today's close for the NGX there. Now let's head on to the UK. Let's see what's happening there. It's all about strikes right now in the UK, and we have Juliana there with the details. Great to have you, Juliana. Good morning. So now we're seeing about 100,000 civil servants are setting a date for February the 1st for another round of the strike due to worsening disputes there. Looks like the negotiations are not yielding results.
Good morning, Laddie. They're not yielding any results. I think it's actually fair to say that it's actually got into a bitter deadlock between union bosses and the British government. For some reason, Rishi Sunak, the Prime Minister, is not budging. In fact, we had a pretty tense showdown between the opposition Labour Party leader, Sir Keir Starmer, and the Conservative Party leader, Rishi Sunak, yesterday in the House of Commons, the first PMQs of the year. And of course, we know that the NHS, which is at the centre of this industrial action, is much loved by the Labour Party. Of course, it was the Labour Party that introduced it back in the 1940s. But, you know, it was political defence mechanisms at its best, because the Prime Minister managed to buffer it all away. But going back to what you were just asking me about February the 1st, yes, this 100,000 workers, which will be going on strike, overpay jobs and conditions, covers about 124 government departments, including the HMRC. You'll remember, Laddie, just late last year, just after Christmas, civil servants working within airports decided to down tools for 7 days over the same issue. There have been a series of pretty tense negotiations between union bosses, ministerial department heads, but it's yielded no fruit at the moment. So that is going to be happening on the 1st of February. It will be coinciding with another event which is being convened, shall we say, by the Trade Union Congress, one of the biggest unions in the UK, and they're going to be talking about the anti-strike laws, which is causing a significant tension here in Britain. So it's a lot going on. Things are not great at the moment. Even as I speak to you today, there is another strike on the Queen Elizabeth line, which is a line which was just commissioned last year, cost billions and billions of pounds. Drivers there are also downing tools. So it's non-stop. It's been non-stop for the past 6 months, and we're only in the second week of the year, and it's still ongoing.
Still ongoing. And obviously, you know, taking you back to the anti-strike laws, the ministers are supposed to present that. Are there any sound bites, and what kind of reaction are we expecting?
Well, direct quotes here that I've got: immoral, unworkable, heavy-handed. This is just a small snippet of the reactions we got following the first reading of this new anti-strike law legislation. It was read in Parliament on Tuesday by the Business Secretary, Grant Shapps. I think it's important to point out that this new law, if indeed it is passed, likely to, considering the vast majority that the Conservative Party have in the House of Commons at the moment, it doesn't mean striking is going to be illegal. It just means that there is going to be a certain level of threshold that union bosses will have to make sure they tick all the boxes for if the strike is going to go ahead. So I believe, for example, if you are a member of the TUC or the RMT, first of all, over 50% of members would have to make sure they took part in the ballot. And then I believe they're trying to increase it to about 80% agreeing to strike, so backing the referendum. Now, some MPs are saying, you know, Rishi Sunak is trying to outdo Margaret Thatcher because, of course, she first introduced this legislation to take away the stronghold of the union bosses in the early 80s. So yes, it's really not great at the moment, particularly for NHS workers. Ambulance workers decided to strike yesterday. There is a further 2-day strike next week at the time when the NHS is at a critical state of emergency. Patients have been lying in ambulances for over 24 hours. So it's pretty significant. Another headache for Rishi Sunak, but of course more headache for beleaguered commuters up and down this country.
Yeah, so much to unpack, though. Keep tracking all of that. And obviously, I know investors in UK are looking out for that CPI data for December coming out later today. Thank you so much, Juliana. Thank you.
Thank you.
All right, let's look at other markets. Talking about that CPI data, we're all expecting that. We saw the crypto market actually reacted to that with global equities markets there. We see Bitcoin there looking quite strong, and obviously not extreme fear in the market today. It's 30-point fear, almost tending towards greed, because we saw Bitcoin get to that $18,000 level. Unexpected, did happen so fast. Look at the market cap, $819 billion there. That's up 1.25%. Volume traded $46.46 billion. That's up 33.08%. We're seeing buying pressure in the market this morning. Bitcoin dominance, 39.44%. Let's look at the price of Bitcoin this morning. It's trading at $18,153 after starting that upward correction from 16,500 level back at 18K. Big resistance broken there really fast, up 4.12%. Volume traded $23.56 billion. Let's look at the price of Ethereum. That's also holding up quite strong this morning. Did get above $1,400, up 4.99%, about 5%. And we're seeing big volume this morning, $9.87 billion. That's compared to yesterday, bigger. Been averaging about $3 billion in mornings. Let's look at the top alts by market cap. This morning we see it's all green there with XRP, the biggest gainer, up 4.58%. But obviously 2022 was a tough year for the crypto investors with meltdowns and the FTX issue. So obviously getting an education for 2023 will be necessary. Let's bring in my guest now, Femi Adegolu, co-founder, Blockchain Vibes. Hello, Femi, great to have you. Good morning.
Yeah, good to have you, my brother. Good morning.
Yeah, so
Williams, how are you doing today?
I'm fine, thank you, Femi. And as I did say, 2022, tough year for investors in the crypto market. Trusted entities became the bad players in the market. So I'm wondering, for 2023, what kind of education should investors in this market be getting so they can get some profits in 2023 and not, get wiped out like in 2022?
First of all, I have to say it's a good day. The candles are green a little bit. At least we are seeing 18K today on Bitcoin. We are grateful for what is happening in the space because it has a good and a bad effect. First of all, it lets us know that, we need to look out for projects that have utility. We have to look out for projects that have sustainable business models. What happened last year with FTX and Luna is a very, very critical thing that, a lot of investors are really, still feeling the heat in the crypto space. But, I feel that this year we should look more on, educating people. A lot of Africans, a lot of Nigerians, invested for the first time in cryptocurrency in 2020. Like I came to the space summer of 2020 around May, and I came into, as someone who wants to learn about crypto trading. And, I lost some money because I bought my first Bitcoins at that time. I lost some money, in the process. But now I'm smarter. I'm learning that, there's a lot more to know about when you want to invest in cryptocurrency. You have to look at the people behind the project. You have to look at the utility. A lot of project founders are actually selling noise, selling empty products that don't have utility. And, for blockchain to be very effective and for a project to actually be sustainable for 5 years or more, there's a lot of utility that has to be put in place to ensure that, even if the market is in the bear market, the token doesn't die off and the project still stands. And so big ups to a lot of founders who are really doing the most in the space. And for real, I think this year we have to look for blockchain education, educating people on on the benefits of getting to know about the blockchain space in general, and getting to know where to put your money in, because as the Bible says, my people perish for the lack of knowledge. So the more you know, the less money you can lose. Thank you.
Right, and obviously learning is definitely a tough process. And talking about a market like this, you have a lot to actually learn from being your own bank, from interacting with most of these DeFi protocols. You're getting all those yields. It's like you're surrounded by risk, in that market. But what do you think investors should be doing right now to position for 2023? Because obviously, it's starting off on a good note, but obviously we know the bear is still upon us.
Yeah, okay, yeah. So I think that investors should look more in blockchain education. I think this is the best time to actually create awareness and also create more opportunities for Nigerians to benefit from the space. Cryptocurrency for people, so a lot of people think cryptocurrency is blockchain, but the ecosystem is very, very vast and it is wide. So I'm not here to actually talk about the negativity in the space, because the blockchain technology ecosystem is actually very, very huge. And it's a huge market that has been untapped, in Africa, in Nigeria, most especially. And I think that we need more government support to encourage young people to come into the space as project founders, because there's a lot of people who have ideas that can solve problems in the health sector, solve problems in the medical field, in agriculture, in transport, in mining, in manufacturing. So I think that these are ways we can look at bringing investment to the space. Well, first of all, we have to educate the people, and that's what we're doing at Blockchain Vibes. And currently, we're giving 10,000 scholarships to 10,000 Nigerians to learn about blockchain education. There are different opportunities for young people. People can become data analysts, people can become researchers, people can learn legal compliance, and a whole lot of opportunities for young people. We can have more inclusion in the space, because we want to encourage more women to come into the space and bring in the ideas to solve problems. With blockchain technology, in Europe, for example, there are some countries where you can store data on the blockchain you can store your medical data, your DNA data on the blockchain. You can use smart contracts in agriculture. So we need to move from just to the space to make money, or just buying a token for a couple of times for you to pump and you sell. We have to think about how to create value, and that's why I'm here. That's why I'm here, because I'm here to create value and add value to the people. Getting opportunities like this will really help our Nigerian youth to grow, in the space, and not just buying and selling currency or being a crypto trader, or moving from just being an enthusiast. You have to become a blockchain expert in a certain niche in the space. So create an opportunity for yourself in the ecosystem, and not just, buying crypto things this 2023. I'm encouraging young people to actually focus on getting educated in blockchain, start a career in blockchain, and create a niche for yourself. From there you can actually become a part of the project and become a stakeholder in a blockchain company, not just buying crypto tokens. So I think that this will help, first of all, in bringing foreign direct investments to Nigeria, because as I said, the blockchain technology ecosystem is really on top in Africa, and we can solve a lot of problems in our country. In Nigeria, for example, we can use blockchain in storing data, keeping records in government. So this will actually reduce crime, reduce fraud, reduce public investment of funds. So we need to actually be able to look in the bigger picture. How can we move from just being a crypto enthusiast or a blockchain enthusiast to becoming a blockchain expert?
All right.
Get education, get a career in blockchain.
All right, Kwame. It'll be great to see
for the opportunity to come in the next few years.
Yeah, it'll be great to see the blockchain technology actually solving real issues. Hopefully that starts in 2023. Thank you so much, Femi Adegolu, co-founder of Blockchain Vibes. Thank you so much.
All right, thank you.
All right, now let's look at what's happening with the top 5 gainers there. We see it's just AVAX there. Top gainer, 23.98%, trading at $15.51 per coin. We see Naira protocol also on the top gainers list, and Phantom as the DAG protocol, that's up 8.50%, and Axie Infinity also getting on the top gainers counter, up 7.44%. So the markets are definitely rallying this morning. USD, they're stable, supposed to be stable, but it's down by 8.54%. Lido Dow also on the top gainers counter, but I'm sure investors right now looking out for that CPI data coming out later today. Be interesting to see what direction it goes and how the markets actually react to that. We're looking forward to that. So that's it for the markets today, and that's it on the show. Thank you so much for watching. Don't forget to join us at 1:30 for Business Incorporated for more updates and developments in the world of business. Remember, you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television. You can watch all our productions. Thank you for watching. I'm Ladi Williams. Bye for now.